The legal fiction of the straw man, understanding corporate identity and financial control. Introduction, the concept of the straw man. The United States legally defines the fictitious entity bearing an individual's name in all capital letters as a corporation. According to 15 USC Section 44, a corporation is any company, trust, so-called Massachusetts trust, or association, incorporated or unincorporated, which is organized to carry on business for its own profit or the profit of its members. This legal designation allows the state to exercise full authority over the entity unless an individual formally objects and reclaims control. UCC-1 Financing Statement and Private Control. A UCC-1 financing statement serves as public notice that the individual, acting as the secured party, has a claim against the debtor, the unincorporated corporate entity, or straw man. Filing this notice effectively removes the entity from state jurisdiction, placing it within the private domain where the individual holds primary authority. This transformation creates a legal separation between the individual and the corporate identity, enabling greater financial autonomy. Legal definitions and financial instruments. Financing statement, a document outlining a secured party's security interest in specific assets, ensuring third-party awareness of enforceable claims. Security agreement, an agreement between a debtor and a secured party granting an interest in personal property, which is perfected through possession or proper filings. Security interest, a claim in property that allows for liquidation upon default to satisfy outstanding obligations. A security agreement is essential for filing a UCC-1 financing statement, though it may be verbal or implicit rather than a written attachment. The Treasury and the Individual Master File, IMF. The Internal Revenue Service, IRS, maintains an Individual Master File, IMF, for each strawman entity from birth until death. This file records all commercial transactions and associated liabilities. Alleged financial charges against the straw man, ranging from tax obligations to financial penalties, are often leveraged as instruments for the issuance of U.S. Treasury bonds. These bonds are traded by government institutions, creating a hidden financial mechanism that remains outside direct public scrutiny. The individual as the creditor. Contrary to public perception, the individual serves as the actual creditor of their straw man. Government and financial institutions merely act as intermediaries, leveraging the individual's commercial transactions for profit. However, this arrangement has inverted natural financial dynamics, where individuals pay interest, taxes, instead of receiving returns on their inherent economic contributions. Acceptance for value, balancing the account. Through acceptance for value, A4V, individuals may legally counterbalance IRS charges against their straw man by utilizing their pre-established credit. This administrative procedure facilitates debt discharge and the restoration of financial equilibrium. Congressional acknowledgement of U.S. bankruptcy. Representative James Traficant addressed the United States Congress on March 1, 1993, acknowledging that the U.S. government had been bankrupt since the Emergency Banking Act of 1933. House Joint Resolution 192, passed on June 5, 1933, suspended the gold standard, dissolving the sovereign authority of U.S. government offices and transferring financial control to international banking institutions such as the International Monetary Fund, IMF, and the World Bank. The Federal Reserve and the legal illusion of money. The Federal Reserve System, created under principles of canon law and sovereign trust structures, operates as a maritime lender under Admiralty law. Federal Reserve Notes, FRNs, are debt instruments rather than real money, as they lack intrinsic value backing. Inflation, caused by excessive issuance of FRNs, serves as a hidden taxation method that benefits central banking institutions at the expense of public wealth. Financial hypothecation and property rights. Since 1913, the Federal Reserve Act has systematically transferred private property and financial autonomy to the central banking system. The 1933 Bankruptcy Act further consolidated this transfer by pledging all present and future assets of U.S. citizens to the Federal Reserve as collateral against national debt. As a result, American citizens became economic tenants rather than sovereign property owners, mirroring a neo-feudal financial structure. Economic consequences and national bankruptcy. The consequences of this financial system manifest in increasing debt burdens, economic instability, and the erosion of property ownership. Despite working harder, many individuals experience diminishing financial returns due to systemic economic imbalances. The national debt crisis perpetuates a cycle of economic servitude, wherein future generations inherit an unpayable financial burden. Conclusion: Reclaiming financial sovereignty. Understanding the legal fiction of the straw man and its implications is crucial for reclaiming financial sovereignty. The existing financial system operates through legal constructs that prioritize institutional control over individual autonomy. By navigating these structures strategically, through administrative procedures such as UCC filings and acceptance for value, individuals can assert their rightful position as secured party creditors, challenging the existing economic hierarchy.